What is going on, everybody? We're currently in Mara shares. I entered Mara right here. If we drop down to the 2-minute time frame, I entered right here at this 2430 figure. So right above this candle, I was looking for and see now we're taking off. I was looking for a second entry long, which means first entry because we're above, and then second entry. This candle, this green candle, when we get above that, after we had a first entry long, that's a second entry long. And see, now we see Mara is just absolutely booming. We're up 3.5% here, but I've already taken profits, most of my profits right here at this 2470 figure. I'll take the rest of my profits here. We might continue to go higher, but I want to talk about this trade real quick. So, and that was $24.30 to $25.36. So about $1 a share. So here's the thing. We see we're in an uptrend. Why? Because, well, we're not going down. But then we see that we have a pullback. If we use the Fibonacci, and the Fibonacci is just a tool to structure the trade. We do it from the high of the candle to the low of the candle. See, now we're really starting to go up. Nice one. So any time below 50%, that's a discount. Treat it like a Black Friday deal. 61.8% is our favorite. So we see right here that we dip into the probably about 55% in the middle of 50 and 61. And we see this line right here. This line is our 21 EMA, which counts the average moving price. And see, now it's really starting to go up. That trade worked. So now it's starting the 21 EMA tracks the last 21 candles and tracks the average moving price for them. So we have this. We see we run up, and we see we have a first entry long. Now, the first entry long is this structure right here. These three candles right here. So why is this first entry long? Well, see, now we're at all the way up here. So that's probably about 6% on the day if we were holding, which we're not. So first entry long, we buy above here, and we buy above that candle. That's our first entry long. You can consider this first entry long, which I would, but even this first entry, pull back second entry. But for right here, we have first entry, we break above, then we pull back a little bit, and we break above the high of this candle again. At this point, I'm in, right above here, this 2430 figure. And then my target is 2476. Why is my target 2476? Well, there's something called a measured move. And if you measure this structure from the highest close to the lowest open of this structure right here, we get this rectangle. If we then draw it from the lowest close, we see a measured move target at 2476. We also have a level there, so that's a nice place to take profits. What I'm going to be looking at now is Bitcoin. Bitcoin's at 90,800, trying to break that 91 figure. So we see Bitcoin is still in this monstrous uptrend. And Mara is a Bitcoin mining company. They mine Bitcoin, and I believe they have a small stake in Ethereum as well. So what we're going to be looking at now is, can we find a trade off of this structure right here? So what we're going to do is we're going to use the Fibonacci tool, draw a fib, and we're going to see this. So if we pull back into this 50% area, I would be willing to take an entry here because I would consider this a pullback and maybe go for the height of this leg again. If we end up skipping it, which looks like we are, and we break above this candle, that'll be first entry long, pullback, second entry long. I'll buy over here. I'll buy above. I would prefer to buy in a discount area than buy for more expensive. But if we want to pair into a good strong bar like these, and we want to break above that, that's my indication that bulls are going to continue to buy, and we could see the next level, which is 26.75. So this is the 1 minute time frame. So the candle should be closing pretty soon here. So the top of this candle is 25.77. So I'll set a limit order, which is called a stop order, to buy at 25.78, 1 cent above. However, if we don't break above 25.78, it won't film it. If we end up deciding instead to make a measured move down here. So it looks like we are going to end up making this move down. So I'm really just kind of watching and observing now. I will be willing to take an entry, but I would rather see it close first. And I'd like to see a break above. See, we get that measured move target. See, all the stocks are is measured move after measured move after measured move. Everything is measured move. And I think that would make sense, right? Because we've got to measure something in order to make somewhere. So I like this right here. This is a riskier entry, but we could take an entry right here. We didn't, but see, there were some people that did. Why? Because we're below 61.8. We're on the EMA. We have a measured move target for the bears. So logically, bulls want to take control because there's bulls trapped up here, right? There's bulls that were buying. And now we just sold up. So they're still stuck. Since we missed that entry, what I'm looking at now is a break above here. It's time to leave this town. It's time to steal away. Let's go get lost anywhere in the USA. Let's go get lost. Let's go get lost. Blue, you sit so pretty. So I'll do a stop order above here. Stop order at 25.51. But most likely we're going to continue to go lower, and because markets like to move in legs of 3. So 1, pullback, 2, pullback, potentially 3. I still have my order above here just in case. So we do end up breaking above. Now the question is, do we trick out bulls? And bulls are trapped now from right here, and we end up going lower. Or do we make a new high? As long as we can break and hold above 25.50, we'll be good. So now what we can do is we can analyze that, or we can compare that with, which is the S&P 500, which is just flat right now, and QQQ, which is going down a bit. So see, I'll trim here. Oops. So I messed up. I didn't end up canceling my buy order. So we ended up buying another couple shares up here and then selling for a loss. So that's a 3-cent loss. So that's not what I would like to do. I didn't mean to buy another set of shares. I really didn't. But now we're in shares. So it doesn't matter. We still will likely continue to break to make a new high. But I'll keep my stop loss tight just in case, because I don't like. Now the average cost is $25.65. So that's right here. So we did buy right here. Now we bought right here. I meant to sell instead. So the stop loss is below here, this 25.44 figure. Stop loss will be like 24.36. Why? Because 1 push down, 2 push down, 3 push down, this could be a pullback. Likely is a pullback, which is why I didn't even want to buy up here. But we did, so that's what we're dealt with now. That's a rookie mistake. So I just get my stop loss hit. Which, see, we wouldn't have even had our stop loss hit had we been up here. But now we are. Now we probably go lower. So I'll wait for this to play out. I'll wait for this downtrend. So what am I doing? I'm just watching, waiting for us to break below. So we don't have an entry. Let's go look at DJT. This is Truth Social. This is the Trump stock. I wouldn't like to enter here. What does this look like? Oh. This could potentially play out to new highs. But what this looks like more to me is a bear flag. So bear flags are bear breakouts followed to a trading range. Big up, big down, big up, big confusion. What happens in a bear flag is we usually retrace the height of the bear flag from the high of the flagpole to the high of the range. So see, we are breaking above, but this was just too risky of a trade for me to take. So we could end up going to 29.93, or even from the low of the bear flag, which would lead us to 29.30. I see the EMAs all stacked. We're trying to long into EMAs and VWAP, which is never really a good idea, because there's a lot of sellers that like to sell at EMS. So we end up taking out the 61.8% again. What we're looking for now is continuation. So we probably end up breaking below here. We probably go to right here. I would be willing to be a buy at this 2470 or this range right here. So we're trying to break underneath this candle. That's what bears are targeting. That's what bears want to do. So we end up, this bottom is 2487, this bottom is 2489. So that's the double bottom. And that shows just how powerful bulls are. Bulls really do not want to break that low. What happens now? Well, we had one leg down, pull back, second leg down. Either we have a third leg down and we break into here, or we have that as the low. We continue running up to make new highs. That's our two options. Either we go up or we go down. But I'm going to be a buyer of Mara above this candle. So 25.42, I'll set a limit order to buy at 25.43. So if we end up pulling back, there we go, I'm in. So I anticipate a break to new highs. But this is choppy. So I might get stopped out. I'm just watching and waiting for this candle to close. I'm waiting to see what happens. So we're starting to retrace a bit. I might be wrong about this being the second entry. First entry long, pull back, second entry long, no break below. If so, then I'll stop out. I have 50 shares right now. So we're trying to retrace into the bottom here. If we can't reverse, I'll get out. See, it's hard to stop out right here because we might reverse, but more than likely we break these lows. But see, now bulls are trapped up here. I'm one of the bulls that are trapped up here. If we break below there, I'd be willing to close my position. Why? Because this is a red candle. We break below, boom, we go lower. But I'm still thinking we have this 2603 figure. So see, what ends up happening is from where we were thinking about selling, well, I wasn't even thinking about selling, but from where we were talking about it, we're now 30 cents from there. That's why it's hard to sell down there and not have real stop losses because you get reversed. We're still holding all 50 shares. I haven't done anything with them. So the other stock I long was Chewy. So Chewy is doing well. I'll take some trims on Chewy. The other stock I was in was GameStop. Looks like GameStop is just flat here, potentially a bull flag. And I wanted to sell at 27.10. So I trimmed 26.90. Let's go back to GameStop, or let's go back to Mara. Mara is continuing to break higher. So I'll trim some shares here. 25.64. But I still think we break higher. I trimmed a couple more. See, just in case this is the trading range, which it is, and just in case we don't break out the top, buy low, sell high, scalp trading range. I still think we make new highs. So let's look at Chewy. Let's look at GameStop. Come on over, do it. So I'll sell GameStop just to break even, just to get out of it so that we don't have to watch it as much. I still think we have a chance of making new highs, but I think we make new lows first. So as we can see, we're trying to push higher on Mara. See, because they're still both trapped up here. So, do you see how on the 1 minute time frame, it's a lot easier to read how we went big up, big down, big up, big down. So this might be the top if we can't break higher. However, usually if we have 4 or more green candles in a row and we have a red candle, then the red candle is preceded with the new high of how long of the previous leg. But I'm also cautious because this is a trading range, and trading ranges are usually new high, new low, new high, new low, just continuing to go up and down, just choppy. And according to Al Brooks, 25% of trading ranges break out, but this is technically the top of the trading range. So we could reverse here and push up. but I'm not so blind to the trading range that I'm not tapping my finger over the sell button. My finger is hovering over the sell button just in case we decide to break lower. Okay, so see, that's why we don't sell at the low of a trading range, because usually we buy at the low of a trading range. So even though we were breaking lower and lower and lower and lower, we don't want to sell yet. If we can't break above, I'll get out. Likely we break above and we'll test no house. So it doesn't look like that's going to happen. How's Chewy looking? So that's why we trimmed up there. Now we pull back. And then if we break new high, then we can keep going. But I think I'm going to exit Chewy here. So I'll actually sell more here. Why? Because we're breaking lower. And give me a second, let me get out of this. So see, this is not the best sell because there's going to be a lot of buyers here. But what I see is leg one, pull back, leg two. If we measure, we see that we overshot the measured move target. But remember, I said I would like to be a buyer somewhere in this range, betting on the breakout not working. But I'd like to see how we close on this candle first. Ideally, we close very high volume at the low of the candle. Why? Because that's a potential exhaustion candle then. So I'm long here with the stop below this. So I'll take a trim here. $24.65 I trimmed. Right here. So if we were to go lower, it would be right here. If we break below 24.40, right here, I'll get out. So that's all my trades for the day. Simply because I'm out of settled funds now. So let's analyze what happened. We were in a trading range. We were trading on every one of the longs. We ended up making a mess up right here. Because instead of selling, we bought more. So I made that mistake there. I wanted to sell. We come back down. I take a loss. But I trimmed some up here. We come back down. We buy. We take a gain. We try to buy that candle, but that loses, so we take a loss. And then we continue breaking lower. We try to buy here. We get up there. We take a gain. Why did I trim at 24.65? If we measure this candle, we're looking for the 50% zone. It's a little hard to see, but the 50% zone is the line right underneath 24.76, 24.73. We like selling 10 cents away from target, remember? So since it was 24.73, we like selling 24.65, since that's roughly 10 cents away. We expect the trading range to not break out to the downside. We end up breaking down out to the downside. Now we're looking for a bottom entry, because now this might be the full move. If we can't reclaim at 23.88, then we're going to go lower, and we're going to go take out these lows. See, we're starting to reclaim off that number. We also have 1, 2, 3 legs down. So see, that's really overextended Donald Trump stuff. TJP. Try to catch. We might catch. I still am interested in Mara here, though. I would still like to play Mara above 24.28. I'd like to have caught this bottom figure, but we didn't. And that bottom figure is a risky buy, because remember, this candle was red. This candle was red all the way down here. That's how we got there. So if we can break above that, we'll be good for at least the CMA. But I think we're going to continue breaking new lows because there's bearish trap there. What do we want to listen to? Yeah. Ooh, we missed Rivian. I wanted to get into Rivian this morning. See how much volume it has? That's significant. See, we end up breaking a new low. Some people say this town don't look good in snow. You don't care, I know. I'll buy 2377 with a firm stop loss. This is a really risky trade. I don't expect it to work. I'll trim here. So, why did we buy there? We knew we had a 8-cent loss. We knew we had a first target of 11-cent gain. So, that's almost 1 to 2. 1 risk for 2 reward. And we like that. See, I'll trim again here. The more... The thing is, if we end up going lower, we lose 7 cents. If we go higher, then our reward is very, very powerful. So that's worth it to buy down there with a stop loss if you know what you're doing. Because you could have also bought down here and you'd be down. I see an overshoot of this level. I see an overshoot of this trading range. My mind screams to me, we're overextended. We need to buy. That's why we're going higher up. I'll also sell this candle. Trimmed again. So we've now trimmed from 23.75 to 23.93, and our stop loss was 23.69. So we were actually risking 6 cents. 6 cents to make 20. Just this little candle alone was already a 3 to 1. That means you have to be right about 20% of the time in order to break even. So you can be wrong 4 times in a row. As long as you're right on the 5th time with this kind of setup, then you're making money. Or at least breaking even. See, we have so much room to the upside now that if we end up making it higher, and if we end up breaking this EMA, which we might not, then we're going to go up, and then that's going to be a huge risk reward. We like a risk reward. We like positive risk reward because that's positive trader's equation. So we're breaking above this. We're trying to anyway. So see, we break above. I'll trim. I'll trim again because we just closed that candle and we're close to 21 EMA. And remember, what did I explain earlier? I said trading into EMA is risky because usually we make a new low depending on the context. We are 1, 2, 3, 4 pushes down. Usually markets like to move in legs of 3 and an undercut. we undercut underneath that candle. Bears get out. Bulls reverse it. Now, either bears bring it back down again right here, or we go to the top of this candle. And remember, our stop loss was $23.69. Current price is $24.50. So that's like what? It's like a 10-to-1 trade. Something like that. I'll trim here. So my weakness is that I trim too early. I like getting out of trades when they're green, and I don't like holding when it's working in my favor. So that's something I'm working on, because logically, we didn't need to exit half of our position here, which I did. This is also forming a pattern that we like to call the Texas pattern, because this looks like Texas. But the bottom half of Texas. So we call that Texas pattern. That's not really what it's called. That's just what we call it, because, you got to keep it fun. But all this is 1, 2, 3 legs down, a break underneath, a reversal. That's your Texas pattern. So let's stop looking at Mara for a bit. We'll set an alert up here. Let's go see what other opportunities the market has in store for us today. So I don't like anything there. Although, see, we did hold, and we made a push to 21 EMA. No, this is it's all kind of junk right now. That could work. Rivian could push to the last bull breakout. Why? Because we have so many green candles in a row. 1, 2, 3, 4, 5, 6, 7. That the first short candle, the first red candle, will likely continue having buyers buying at a discount, and will continue going up. And see, QQQ and SPY, which are two big indexes. There's also Dow Jones, which is DJI. But I track Invesco, which I don't know what QQQ tracks. I need to look into that. And then I track SPY, which is the S&P 500. The 500 more powerful companies exist in here. At least more powerful United States companies. So what do we see here? Taking what we know, we see if this candle gets above this candle, like we did up in this wick area, in this wick. Wick means the line above or below a candle. That's a wick. That's also a wick. It's just that little line. It means whatever was in control reversed it. So knowing what we know about entries, what do we see right here? If this was green, we see a first entry long, pull back, second entry long. What that means is if we can break above 2461 like we did right there, we're continuing to make new highs. We're continuing to push higher. So just to make our measured move the low-hanging fruit, if you will, go for the low-hanging fruit. We're going to measure from the lowest open to the highest close before the trading range. We can almost look at this as a bull flag. We're then going to measure from the lowest low wick. Just because I like taking the easier trades, I like taking the low-hanging fruit. So normally you can do it from the lowest open or the lowest close. That's why I say that I'm just going to do it from the lowest low. We see 50% zone is right here. 50% of this leg projected up is right here. So we'll trim here. And then we see we want to take out 2514 for the first low. Or I'm sorry, not for the first low. What am I talking about? I'm yapping. The 2514 for the measured move target. So what will we do? We will mark 2514 just to note it. That way we don't forget the number. So this is a perfect example of a stock only going up. Stocks only go up in something called a bull channel. So bull channels, stocks go up in a bull breakout as well. But all channels are trading ranges. Trading ranges, big up, big down, big confusion. Tilted in a bullish direction. So what does this look like? Well, you can enter anytime in an always in long bull channel. And the only time you would be looking to short a bull channel is in an overshoot. So what is an overshoot? You see how this chart, it follows this line perfectly. If we break above this line, say the stock does something like that, and we break above the line, that's the important part, breaking above the line, overshooting the line. We see that, and we know that within 5 candles on the highest time frame, you can see this is a bull breakout on a higher channel, on a higher time frame. You see that? It's just continuing to go straight up. No selling at all. Every time we sell, we reverse. That's why it's easier to see a bull channel in like a smaller time frame, because every time we go low, we can see that print. When we overshoot, Al Brooks tells us that within 5 candles on the highest time frame you can see the chart, we will start making a new low. When we make a new low, what happens? We end up retracing all the way to the bottom of the channel. This is TSLS. This tracks Tesla. And this tracks the bearish of Tesla. So as Tesla goes down, TSLS makes money. We go back to Mara. We see Mara is pushing higher. 24.95. That was another trim target. So we'll take another trim. And remember, we're down from right here. We have 23.77. We're right here. This is our candle, the bottom of this. Or I'm sorry, right around not the absolute bottom, but we entered right here, thinking Mara was going to go up, which it did. Our stop loss was below there. That's one of the most perfect trades you can take if you're trying to be a reversal specialist. If you're trying to buy on reversals and not just, say, buy on bull channels. So if we know that Tesla short is working, what does Tesla long look like? Well, the exact opposite, right? And if you can see right there, we almost have an overshoot, but not quite yet. We're still continuing to go just straight down. So this is what Tesla long looks like, an ETF that tracks Tesla. Why would you ever buy this? Well, because Tesla is an expensive stock to buy. You can buy $19.82 for a share, or you can pay $329 for a share. Also, this goes a bit slow, or it goes a bit slower, but no, it goes double it. It goes double what Tesla's moving. So we see these EMAs, we continue to go straight down. What does Bitcoin look like? Bitcoin is now broken 92,000. So that's going to look for Mara. And see, Mara is almost at our measured move price target. Again, we can, since we made it to our measured move price target and we're still not selling off, we can remeasure, find a higher price target, which is 25.35. So we'll see what happens here. We'll see if we break and if we go to 25.35 or not. But see how once we reach the top, once we reach our target, or at least very close to, we just sell off massively. I mean, this candle alone was 25.10 to 24.70 into EMAs as the largest candle of this whole move. Potentially, this gets bought and we end up making a new high again. That's what I would think happens. Why? Because all these people that are, oh no, I'm waiting for an entry. Well, they finally have the first time to buy an entry, and they are just wanting one. Either that, or we reach the measured move target, we break below there, we break below the EMAs, and we go back down to the bottom of this range. If we break below the bottom of this range, that's when we could go to make a new low. but I don't even think we're going to break the bottom of this range. I don't even really think we're going to break this low. Why? Because there's a level here, there's EMAs here. This is a perfect late buy. The only thing that is making this bad is the fact that measuring that range, projecting it up, brought us to right around here. So if that's the accurate measured move target, why would we go any higher? So likely we go flat for a while, just kind of choppy. Since we're on the 1 minute, at least 2 minutes. 2 candles. Why? Because we need a green candle and then we need another green candle. First entry long, pull back, second entry long. So at this point, from my issue with trimming, I'm down to one share. I had 50. I'd like to improve that I sell up here more instead of just selling right at the start. So see, we're continuing to break lower, but it's still relatively flat. The amount that we have broken lower, this is 2473. The low of this is 2473. We're at 2473 right now. The low was 2465. So what might be happening is we're retracing. This is a bit hard to see, ain't it? Is that better? We're retracing. No, I still don't like that. That's easier to read. So we're retracing into this in the middle of 61 and 78. That's about 66 to 70. That's a discount, remember, because anything underneath 50% at or underneath 50% is a discount. A Black Friday sale. Which we end up doing. Bulls are buying this. The high of this is 2464. The low of this is 2465. We'll explain, but all you need to know is the low of this was 2465. The high of that was 2465. The low of that was 2465. We want to retrace into that area. Same price, so double bottom. So now a good price to sell would be underneath 2465 because we reversed it so strongly that I would really not like to be underneath 2465. It's hard to be long underneath 2465. Especially because what could be happening, and this time we're going to draw from the high to the low, is we're retracing into, I guess we're going to end up talking about it right now. So imbalance. Imbalance is what happens when price is so sharp that we don't trade into it, and then we trade into it. Right here, we trade into it. We trade into this this bearish imbalance right here, and we go lower. So we could sell as the final target right there. See, We ended up going to the 66% mark right here, going up 30 cents, going to the 61% mark right here, getting that imbalance, and bears push us down even further. So now it would be hard to be long right here. But at the same time, that is a 61%. Bulls might try to buy it right here as one last attempt. If bulls aren't able to break it, and we would be looking for... Bulls are looking for this area right here. Bulls are looking for 50% of this candle. So that's 24.65. But it seems like bears are stronger. So likely, since we're below this, which was our stop loss, likely we're going to keep going down here. Although it's not out of the question for bulls to try to reclaim right here and try to hold it. I was raised up by a simple man. I grew up with a gun in my hand. Taught me how to love and how to fight. Kind of like this. This is kind of this literally is an overshoot. But the difference between this overshoot and what we were talking about, overshoots need to happen in the direction of the channel, not in the opposite direction. Usually we get the opposite direction breakout to new highs, or the opposite direction breakout to new lows. We were looking for a break above and then short. Instead, we got to the top and then we shorted. But I wonder if we can draw the channel a little tighter. Yeah, no, it's still not a break. It's still not an overshoot. We just got to the bottom and then pushed up. So, Donald Trump stock. Kind of like a bear channel again, right? It's the bottom one. GameStop did well. GameStop broke underneath here, which we thought was going to happen. We thought we were going to make a new low before a new high. I remember we talked about that. We ended up going to a new low, or almost a new low. Reverse. I'd have to study this further, but I believe this is the first entry long because we break above the high of this. I'm just not sure if we break above the high of a red, if that's the first entry. But whatever happens, we break above, we pull back, we break above again, and then we fly. So see, bulls try to buy it back right here. That's why we pinned green. But then bears are just stronger, and bears are trying to push to a new low. So it really doesn't look like there's anything worth trading. We're kind of just flat, which makes sense because it's almost 8 o'clock. It's almost 11. Which we trade 6:30 to 8. So I think this is where we wrap it up. The last thing we'd like to do is go to Black Box Stocks. And Black Box is our scanner. It shows flow, what big money is buying, what people who are risking a lot of money, or what people's, because it's usually institutions, what they're buying. That's important because if they're willing to spend a whole bunch of money on a trade, well, why are they willing to spend that much first off? What do they see? And are we able to make a trade off that? But we kind of see the same names popping up. Tesla, D-Dog, SMCI. One of the things I like to scan for is we turn off those and we just turn on unusual activity only. So is there anything unusual that they're a whole bunch of? RKLB. So this is the RKLB, and they're buying options contracts, which is another type of trading you can do. You can do shares or options contracts. So what does this look like? So see, we're up 41% today. When did the first start coming in? It started coming in at 6:31. So it started coming in right. So kind of just ride it. Even in pre-market, they're already starting to hammer it right here. But then when market opens, we have a first red pullback with heavy volume and a new high. So it alerted us right here. If we would have followed that and we held to the high, which I probably wouldn't have, I would have started trimming, we would have made 12% on our money. Not bad for an hour. Less than an hour, even 20 minutes. Not bad for 20 minutes. So for the last thing we will do today, we'll see how could we have predicted this movement before it happened. So what are we looking for? Well, again, we're looking for measured move. I'd kind of like it to be on. So I'm looking for something that looks captivating. So yesterday we had this movement. If we trace from the lowest open, the highest close, and I'm talking about this area only. These candles, I'm not talking about these. I'm only talking about this leg. So if we bring this, and this was 6:30, let's see if that's the same size. So it's about 30 cents off. So what that means is there's probably maybe it's the low to the high. So if we trace from the low, 1779, we see that the high was 21.56, so we're 10 cents away. 10-cent rule. That's not so bad. So what this is saying is we could have measured that. First, we could have known about the stock. I didn't know about the stock. We could have measured that after hours trading, pre-market trading, after hours trading, pre-market trading. Market opens right here. Right there. If we bring it to the 1 minute, market opens right here. We measured the low. Okay, so maybe a bit higher. We measured the low because we measured from over there. Put at the low, put it to the high. We see a measured move target is 21.65. We're still in an uptrend, so likely we break new highs and take that out. So measured move target still in play. We also see a measured move target here. From that open to that close. We have one push, pull back. Two push, pull back. Three leg. One leg, two leg, three leg. Pull back. One, pull back, two, pull back, three. See, market likes moving in legs of three. So what leg are we on here? Well, one, pull back. Two, pull back. This is our third leg. So we might run right now. And see, that was the first entry long, pull back, second entry long. We might go to take out this high right here. Last time, Mara has taken out this low, and we're now reversing. Markets like taking out lows, taking out highs, like taking out lows, taking out highs. That's how moves happen. We take out the low. Trying to take out the low. We almost did. And this happens every single day, 5 days a week, and it'll never stop. And this, ladies and gentlemen, is the last free enterprise in the United States of America. This is where you can make the money. Thank you for joining me today, and I wish you a great rest of your day. Take care.